Hi everyone, this is Rob Roy of Elliott Wave Options, and we just finished tonight's Trade Finder Live. So this video is a brief summary of what you may have missed. Talked about the S&P, the dollar, Bitcoin, and a number of other markets. If you like the content of these videos, please hit the like button or hit subscribe. You'll be notified immediately when one of these videos is posted. Or better yet, sign up for Trade Finder. It's free. We talk about the markets. We look for trade ideas. We have a live Q&A. Every Tuesday night. Love to have you come along. Well, let's take a look at the charts. At the time of this recording, it is 11:15 on Tuesday evening, and the futures are currently up a little over 5 points. So taking a look at the charts, again, what we looked at in tonight's Trade Finder is how vertical this move has been to the upside, and discussed, is 420 it? Was that the bottom? Well, in looking at the charts, the complex C wave zigzag has been disqualified, but the large zigzag is still in place. As you can see, nothing has really changed in that pattern, with that 100% extension still down there around 400. But with this move back to the upside, it kind of feels like maybe 420 is the bottom. But in looking at volume, you can clearly see that volume has kind of fallen off a bit as the market has moved to the upside. Now, impulse moves often start with short covering and can be on lower volume. So this could be an impulse move to the upside, and perhaps the 61.8% extension at 420 was it and was the bottom. But when we look at the 10-day moving average, you can see we are overbought at this point. And if we look at the 200-day moving average, we broke above it today. Can we get a follow-through day tomorrow? I don't know. With this oversold condition that we're currently in, breaking above this level of resistance at 450 seems to be a little bit tough. If this is an impulse move to the upside, the market still needs to consolidate here, in my opinion, under this 450 level and allow the 10-day moving average to catch up, gain a little bit of momentum to try to break through that 450 level. But breaking above the 200-day moving average, looking for confirmation, you would need another up day. So a little bit of a dichotomy in there. With the fact that this move to the upside has been so vertical, if you've heard any of my videos before, you know that I'm always leery when things move vertically, because what goes vertically up often comes vertically back down. So is this the scenario where we have this rip your face off rally to the upside and it's just a sucker's move to bring all the longs back in and then we roll over? Or is this an extended impulse move? We rest a bit, maybe correct back down towards that 10-day moving average, and then we start a new move to the upside. Either scenario is viable at this point. When we look at interest rates, you can see that the 10-year is rocketing to the upside. Now, is that because the Fed came out and it was even more hawkish than before? I mentioned that I didn't think the Federal Reserve would go 50 basis points at the first meeting, because that's kind of egg on their face, like we got it wrong. Everybody knows they got it wrong, and the fact that they accommodated with liquidity for too long. But then Chairman Powell came out and said, hey, we may go 50 basis points, and the market's trying to price in not just 50 basis points at the next meeting, but a 50 basis point rate hike in the following meeting. So is that why the 10-year is sprinting to the upside? Could be. Or is money moving out of the bond market and back into the equities market? I think it's likely a combination of both. And then when you take a look here, you can see that even the 10-year is a bit overbought short term. So taking a look at the dollar, this is where I have a little bit of concern, is the fact that the dollar has this triangle. Now, having a triangle within a wave 3 is not unusual. A little corrective pattern following the big run to the upside. What would concern me is if we break to the downside out of this triangle and we were to break 97. Because the Federal Reserve said in their extreme desire to break the inflationary bubble that they will forfeit growth in order to beat inflation. Well, if the dollar were to break down below 97, I think that starts to show some global weakness. And I'm a strong dollar fan. If you heard any of my videos, again, you know that as well. So when we look at a triangle, I'm well aware that they can break either direction. And even though Elliott would say, well, in a wave 3, it's likely to break to the upside. Well, I think that would be great. But I've also had enough experience to know that you got to respect both directions in a triangle. So a break to the downside, as long as it stays above 97, is okay. My concern would come in is if the dollar broke down below 97. I think that's where we could start to see a sign of global weakness. The other issue that I'm concerned about is the yield curve is starting to flatten out. In fact, some combinations of the bond market have already inverted. And so that's a sign of a recession. When the people come out and say, oh, it's different this time, it's never different this time. So I've been wondering why the financials have not performed better. So if we take a look at a chart of the XLF, this is one of those discombobulations, if you will, that I've been wondering about. And the XLF has moved back to the upside, but really not as significantly as you might think. And a lot of the individual financial stocks have not performed that well either. So I've been wondering, well, if interest rates are going up, why aren't the financials doing better? Why aren't they leading the market? Well, that's the reason. The yield curve is flattening out. They need that spread, not just rates going to the upside. They need the yield spread as well. I wanted to show you the Canadian market. We looked at this in the SPY update over the weekend, and I had mentioned over the weekend that it was pretty impressive that the Canadian market was flirting with all-time highs. Well, we broke those at the beginning of this week. But the scenario that I laid out that I thought would be the most positive for the Canadian market is the fact that if I walk this back to where we were over the weekend, we were right under that resistance in the wave 3, but you can see the separation from the 10-day moving average. So we're overbought. So my comments were, I think it would be great if you're long the Canadian market to see it just consolidate a bit, even a little backing and filling. Let that 10-day moving average catch up, gain some energy, some momentum to break above that resistance that was set back in October and November and run up to that wave 5 high. Well, the Canadian market had other ideas. We just broke right through that level. Now we're really extended from the 10-day moving average. And if you're long the Canadian market, that is not the most ideal scenario. Markets can stay overbought or oversold, but not for very long. And a vertical move, when you're already extended, the problem with that is sometimes they don't hold. So we could test back down. Now, if we just test back down to 40, that's fine. But if we break below 40, then we have to hold reset and look for a new potential run to the wave 5. So can it run straight there? The markets can do what the markets can do. So they'll do whatever they want. I just feel like had we just gone a little sideways here and then broke resistance, it would have been a more bullish scenario. Looking at Bitcoin, we look at this really nice symmetrical triangle that is set here in the wave 4 with that 38.2% wave 4 correction still holding. And we actually sent out an alert for our subscribers on BITO, so it's nice to have an ETF that you can trade on Bitcoin. So a triangle, we don't care which direction Bitcoin breaks out. If it breaks above, remember that wave 4 can still set at 50 or 61.8, and the 5-wave impulse pattern to the downside is still intact. But if it breaks to the downside, then we're probably going down to make a new wave 5 low sooner rather than later. We also talked about the ASX because it just has such a massive triangle here, and it is clearly broken to the upside out of this huge triangle and has more room to run. But it is just a little bit overbought right now as well. So that's kind of been the theme of tonight's Trade Finders. A lot of these markets are just short-term overbought. So do we have a significant correction back down, or just a little sideways backing and filling? That's going to be the question for the next couple of trading days. We also took a look at silver, SLV, and this was our case study consideration that we identified for Trade Finder for this night, is the fact that we have a pretty nicely formed symmetrical triangle. We shared with our subscribers that just a few weeks ago we had a triangle and a nice strangle on SLV that generated over 100% gain, which is a really nice gain for one of our strangles, normally in the 30 to 70% range. But here we are set up again. We have another low ADX, so it looks like silver is wanting to break back again, and we'll likely send that out as an alert to our subscribers in the next day or two as well. So that gives you a rundown of TradeFinder and how it works. If you haven't seen TradeFinder before, hope you enjoyed this brief summary and that you'll consider signing up. You can sign up right underneath this video or go to our website at ewotrader.com. Love to have you join us next week. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.